Sid, come on up. So I just found out before I was talking with Sid in the back that I think we both kind of worked at the same company for a little while when we first started, and I was like, oh, okay. So it's amazing how kind of life kind of circles around. So go ahead and tell us a little bit about yourself. How you got started here?
Good evening, everybody. Thanks for coming out. My name is Sid. I joined Lifestyle in 2014, just like one of these nights, and started as a single family and was doing passives. And next thing I know, I was running for multifamily, and we have a 4-year-old right now. My wife is a physician, so this gives me flexibility on doing a lot of things in terms of more flexibility with my time, with my family. So life is great. Life has been very blessed. When I was sitting 6 years ago, I knew because I had one house before joining Lifestyle, and I did everything wrong in there. It's like,
isn't that crazy?
All of that.
But I would be willing to guess that even in that single family that you did everything wrong, you still made money, probably.
I did make money, yes.
It's amazing. Real estate is so forgiving, it's crazy.
Yep.
Imagine what happens if you do it right.
I bought it. I thought I bought it really expensive. I bought it for like $70,000 in 2014, and I still have the house, and Zillow says it's $280. Okay, well, even if it's not $280, I made money.
$280,000, that's 100. Yeah, 210. That's pretty impressive.
So
very good. All right, so very good. So why did you join Lifestyles?
I think if I summarize in one word, I think it's financial freedom. It's what you can do with your time. I mean, I literally can send my kids to wherever school I want. I can go buy a 7-digit house if I want to, and that just accumulates, right? So, I don't know what else I can say, but this journey for where you are dependent on your income versus you're not dependent on your income anymore. And David said one thing was, if money is working for you, there are investors or members over here who have invested only in multifamily, which I was doing. They don't do any work. They don't even call me. Sometimes they forget about their distributions, and it's like, hey, Sid.
Gotta cash your check?
Yeah. So my accounting call is like, look, there's 4 checks still pending. Can you? And it's all canceled, so they have to reissue it.
He's talking about passive investors, which is, and truly that's not dead investors, but passive investors. They're actually called. Very good. So you were truly working for the man, right? You were 8 to 5 job, working 40, 80 hours a week.
Yeah, I completed my master's to get into the company that we work.
Okay.
It's a big oil and gas company. You don't get in easy. And I thought this is my life, right? I got it all. I think I have one other friend who works still for that company, I think. You still working over there? No, okay. Good. So
are you not allowed to say the name of the company?
I was working for Shell Oils at that time.
Okay, I heard of them.
Yeah.
Okay. You heard of them? All right, very good. So what property are we talking about tonight?
So this is my first property. We bought it in 2018. It's in 138 units. It's in Spring Branch, close to where I live. And it was my first property. I had no idea what I was doing. If it was Curtis, Scott. You recently, I think you joined 2019 or at that time. I knew I want to do this, but I have zero clue what I was going to do or what I will do.
Okay, so you didn't have zero clue because you were kind of educated. You were just, it was
Yes.
all new to you,
No
right? I want to make sure,
experience.
because we do educate you a little
Yes.
bit. He didn't know absolutely anything. He didn't go in blind, so.
Zero
All right.
practical experience. Yeah.
Lifestyle.
You said he had no prior deal.
Yeah, okay,
Yeah.
no prior history. There you go. All right, just want to clear that up. All right, so 138 units. That's a pretty big build. That was the
Yeah.
first time, so good job. It was built in 1960, 1965. That's kind of an older property. It comes with issues. We will tell you what those issues are, but it's not anything to be afraid of.
Yep.
Okay, and you purchased it for how much?
Well, it's about 55 and change door, so 7.6 million.
Okay.
We put another 1.2 million in rehab. Are you talking about pretty much doing everything? Roofing, painting, exterior paint, interior, and we can go into that detail if you have to. Our total out of pocket was about 2.7 and a half mil for about 28 passives. Total 26 if I include myself and my wife, so 28. Roughly the minimum average investment was about 50,000. We do have some passives who went crazy on this deal and they spent like 400,000. I have two people like that.
Okay.
Curtis is.
So that's just so you know, if you're new people, they can have people 25K, 50K, 100K. It's relative to what you have to invest. You're going to have ownership in the deal.
In the deal, yeah.
Right. You're actually investing in a company or in an LLC that purchases this asset. So he has 28 investors at $2.7 million, $2.7.4 million, and that's what's there. They get ownership in that stock, like kind of stock ownership, and your distributions are about on your ownership. Okay. So if this person gets 5%, you're going to get 5%. If they get 60%, you're going to get 60%. Whatever the percentages are, it's out there.
But the big thing I want people to understand is the distributions, if done correctly, are tax-free income.
Yep,
That's a big part too.
absolutely.
Yeah, distributions have absolutely nothing to do with how much taxes you pay. That's calculated completely differently.
So whatever money you make in returns, you practically don't pay any taxes on those.
Yeah, and we really don't calculate. We don't. You go over that in a 2-day, right? The tax advantage.
I will
Yeah,
teach that in 2 days.
yeah. That's one thing we really don't talk about a whole lot when we talk about returns and everything. But the tax advantages of real estate are phenomenal. I mean, phenomenal.
I don't know if I can say that or not, but I personally have not paid more than 2% of my effective gross tax for the last 4 years.
Yep.
And that's
Yeah, in
far
fact,
very straight.
the year that I made $2 million, I thought I
zero?
owe in taxes. No, I got back 28,000. God bless the IRS.
Awesome.
Yeah, I've paid taxes in years. I don't know what that's like. All right, initial financing. All right, so financing, you financed. You were all in about what, $8-9 million.
Correct.
And you financed 6.7. That's about 75% loan to cost at 5.2%. Now I'm going to tell you that 5.2% is a horrible rate right now, right? It was a horrible rate. Back in 2018, it was a phenomenal rate.
Yeah.
Okay, so that just tells you where we're going. But even at that rate, you're going to see what kind of returns we've had. So very good. So tell me a little bit about the property, your income.
So we did all the improvements and we increased the income. Today we are sitting at 1.76 annually. These are realized numbers, so these are so far what we're talking about. These are not projected. These are as of May of this year. So monthly we're collecting about 146,000. Our expenses 60,000. Our net operating income, which is the key number that evaluates your property or any commercial property, but in this case, apartment, is about $1,040,000. So our cash on cash return is just about over 10%, and we have distributed close to $583,000 in last 3 years or less than 3 years.
Very good. So just to recap a little bit for you new people. So net operating income, NOI, is really what drives the value of your property, okay? Forget that, okay? Income minus expenses equals your net operating income. Then you have your mortgage and interest that you have to pay. And then you get to a net cash flow, right? That's the cash that goes directly to distributions to the passive investors, his partners that he talked about earlier. So over the last 3 years, he's been averaging, actually starting now, he's averaging 10% returns. 10% on whatever you put into that deal, you're getting back. Anybody want 10%? Right? That's not too bad, right? All right, but here's where it gets kind of nice in valuation. We talk about capital gains. You were talking about capital equity capture. We'll show you that in just a second, okay? But based on that, you see that current net worth, it says about $20 million. Now, what did you buy this at? Let's go back. I forgot about that. You bought it at 7.6 and you put in 1.2, and now you're saying it's worth $20 million?
It is, yeah.
Okay, and it's worth $20 million, and we're going to go through that, and that's called equity capture. But really what that drives that $20 million valuation is net operating income. And David will go over that this entire weekend, but that's what drives the value of this property. So $7.6, $9 million 3 years ago, now it's worth 20.
It is, so.
That's your equity capture, dude.
That's our equity capture, yes.
That's awesome.
So we're all in 8.8. We're looking at 20.8. I mean, and this is at 5 cap, and without going into too much detail on the cap rate,
So if your financial people in the room understand cap rates, that's kind of how you evaluate commercial property. A 5% cap rate on this property is probably a little conservative in all reality, but even at that valuation is $20 million, $21 million. That's an incredible return. Congrats.
See how excited they are?
Awesome.
They're jumping up and down up there. I got to get excited for them. These engineering types.
For sure.
yeah.
All right, so let's see a couple photos of this property. Here's the one thing y'all are going to figure out when even after this class, you're going to start driving down the road and going, damn, there's an apartment complex. Damn, there's an apartment complex. Where did that come from? You're going to start seeing apartments everywhere.
Yeah.
It's crazy how that happens. So very good. So let's take a look.
So as you can see on the left, that was a property that I lived close by. I passed this road every single day, and until I knew that this property is for sale, I would never notice it, because you see a gate in front of the leasing office, so I don't know how people get in there. So we renovated that. This is what lifestyle teaches us on best product, best price, and best service. All these ideas, I'm not a construction guy. I don't have a GC company. I have zero construction experience or zero management experience prior to this. But if you see these differences, it's just a matter of right guidance, just a matter of right teaching. You got to come to 2-day. When I came to 2-day, true story. When I came to 2-day, so Dell was doing 2-day at that time, and he goes, how many of you think that you're paying too many taxes? And of course I was like, I'm paying too much taxes. And he goes, well, he was trying to tell about himself, like he pays this much tax. So really, if you're not paying taxes, if you think you have a tax problem and you're not making 7 figures, you really have an income problem. That's what he said. I was like, okay. So I was
not
ready
6,
at that
that's
point.
7. He was saying 7
figures.
digits, not 6.
At that point, I was like, okay, well, I don't know when it will finish, but I'm going to go and get the membership. And that's what I did.
Awesome. All right, so this is your kitchen before and after. So when we talk about before and after, you remember those rehab dollars he was talking about, okay? Those rehab dollars go into making this outside look like from that to this. We give it a make ready on the outside. Again, David will go over this all day on the 2-day. But we make the outside look nice because that's what people, when they come up to your apartment complex, look like, right? They don't really know what's on the inside. They just look at the outside first. Then you go to the inside and you show them a unit and you're like, oh my God, they're looking at the left. He's going to upgrade it to the one on the right. Or
Yep.
left versus right. Yeah, I've got that right. So yeah, that's just the simple, that's a paint job, a resurface, new appliances, new cabinet faces.
Well, this one is a granite, but
Oh, it's granite? Okay,
resurface is always the case.
Yeah, resurface. Okay, very good. So that's the difference. And what's the difference? Are we allowed to talk about the difference in rents? Can I talk about rents?
You can say that, but
Okay.
keep it simple.
Okay. All right. So again, we talked about how you raise the value, right? Income minus expenses equal NOI. So you want to drive income up. How do you drive income up? You make it look from that to that, and you charge them more rent, right? So very good.
So literally, we bumped up. The first month, I bumped up $75, thinking that everybody will leave. Nothing happened, and we bumped up again $100, $125. We are literally $31,000 monthly increase on our rent, and that's why this $8 million property is now $21 million, $20.8 million. That is the real reason. You get educated or rehab, you increase the rents. That's your new value of your commercial property.
I want you guys to remember this for this weekend. When you come to my seminar on Sunday, I'm going to cover this, and I'm going to teach you how to doing a 10% bump in rents. He's talking way higher than a 10% bump.
Right. And even on your single family, I know it's a lot, I get this all the time with people, new members. Even if you don't join, if you buy a single family house, go buy one. But don't be afraid to rent it at a higher rate. Okay, it's very easy as an owner. You're going, I'm scared they're not going to lease it. Pump the rent up double, or not, I can't say double what you would do, but at least a couple $100, $200, $300 more than you think it's going to be worth. I guarantee today, I'm looking at the rents on some of these single families they're getting. I was like, holy crap, they're freaking high. We were starting to rent when our single family was like $450, $500. I'm like, I can't go to $550. They're going to leave, right? Yeah. And now these people are paying enormous prices, and you're still probably the lowest in the neighborhood, right? Or at least do your market comp, but don't be afraid.
But that was back when Columbus.
It really was. It was all. Back when I had
Derek's
brown hair, it really was. It was a
collecting
while ago.
1,500, 1,575. I have a house in Cypress Creek. I'm collecting 1,575. So it gave me an idea. It was like 1,700 now.
Exactly.
Cypress is the third best school district.
Crazy.
It's a newer house.
So don't be afraid. Okay, so we digress. All right, so let's talk about cash on cash returns. And again, when we talk about cash on cash returns, we are talking about the amount of distributions you get, physical money coming in, versus what you invested. You're 50,000 out, how many thousands came in? Cash on cash return. All right, so let's talk about 2019, 20, and 21.
2019, if, these are a lot of numbers, but if you want to focus on 3 lines, hopefully, it's an NOI, net cash flow, and cash and cash %. So our NOI in 2019 was 785. That was at, I think, right after 6 months or 8 months of takeover in 2018. In 2020, remember this is a COVID time, we barely increased any rent. We were just renewing people on 40, 30, 40 bucks just to keep the occupancy.
But during COVID, you still made a 10% return. That's what I want to get across to the crowd.
Yep.
We still survived.
We survived and we did good, actually.
Survived in double-digit
Yeah.
returns. What is
Yep.
your bank account getting right now? Are you even getting 1%? I mean, it's crazy. You get double digits. That's impressive, dude.
Well, the bank account you're losing because it's inflation and the dollar's going down, so it's negative. In 2021, this is projected on $1.45, but if you look at the last slide, as of May, we're already at $1,040,000. So we're hoping to surpass this projection. This was done for a month ago, so I did not change the number, but we're well ahead on the projections. Cash and cash before reserve, I do want to emphasize that. So these are double-digit returns, but we do keep some reserve as when you get experience in this game, you know that these old properties will bring some work, so you're going to keep some money back in bank account for rainy days. But you're still making these kind of returns.
Very good. So is that good? Is that a round of applause? Very good.
And remember, guys, if you're new and don't worry about all this, I'll explain this in the seminar. Just look at it like if I invested in a bond, 9% return the first year, 10%, 15%, who'd be okay with that? Tax-free. Okay,
Again,
what
that's
we're
cash. That's not even the value of the property. Your equity. That's
Yeah.
not even your equity yet.
Well, let's say you invested 100K, in case some people don't understand math. 9 grand the first year, 10 grand the second year, 15 grand the third year.
Very good. Awesome. All right, so we were talking about projection as far as the value creation part of it. You increase the value by increasing your net operating income. So what we did here was just based on his projections that he just did, we basically went back and kind of recaptured what the value of that property truly would if he was going to go buy it or refinance it or what somebody would pay for it, right? So what we do is we take the value of the NOI, we divide it by what we call a cap rate, which again, David will go over this weekend. Don't worry about it. Don't worry about that right now. But based in 2019, after a year, he went from he bought it for like 7.6, all right, and he put in another million something, so about 9,
Yeah.
and it was now worth around 15 million. Okay, that's pretty nice. In 2020, now it goes up by another million. Now remember, that was kind of during COVID, right? So damn, we only went up in value by $1 million when everybody else is sucking wind, right? So very good. Then 2021, which is current, it's gone up another $4 million. So that's a total equity capture since he started at around $14 million in 3 years.
Correct. And I do want to mention that 14 million.
One person clap. 14 million in 3 years? Come on! All right.
So this is after paying your money back. So if you invested $1, I gave you your dollar back, then I give you $3.38 more on top of it.
Right. So that's a
what it means.
338% return in 3 years. That's. I think you have a term. Don't you have a term for that?
Yeah, what is it? Do you know the term? There's a technical term in the industry for it. Do you know what it is?
I don't know.
Pee in your pants excited. Come
That
on.
is true. Dude, I heard that, yes. I heard that.
That's
Yep,
exciting.
yep.
All right. Awesome job. Awesome job. So, I mean, this is impressive. How did you actually achieve this?
Like I said, I mean, I'll repeat what Del said one time to me. It's like, I was brand new and I had no idea. He said, you go to HEB down the street and you ask them, hey, can you tell me how you run your business and what's your secret? So they're not going to do that. It's like, okay, well, that's why you pay here, and we'll tell you how to do that. So that's mentorship, right? These people over here, they're, how do I say it politically correct? They're successful, and they're very accomplished. They have no reason to come here and stay here for 8 p.m. They're giving back. They're training guys like me, helping people like me. Hopefully one day I can do that too. But mentorship is.
So you can come back and I'll put you at the top of the list and I'll bump me down even further.
So mentorship is one of the things. I personally, when I was investing, I tried to look for location. And again, mentorship and training came in. I realized, okay, well, people talk about location, but when it's times to come to be patient about waiting for the right deal, it's very hard. I kind of waited. I don't want to scare you guys away, but I waited for some time to get to the right location, and that helped. I had a clear business plan because I was keep thinking like an engineer. I was keep thinking over and over again. I was just refining my business plan pretty much every week and asked all the dumb questions possible. That I would, if somebody asked me this, I would like, go away. Don't waste my time. I did save some. When you're proactive, you'll save cost. You probably notice that too. And once you get your second, third deal, you know who to call first. And so we did that and saved some costs, and that helped. But again, that's a small part. The overall plan, the overall game. Even if I don't save the money on some of the items, it won't be 3 and 38%, but it'll be 3 and 20%. So I would still take that.
Again, back to your single family days, you made money and you don't even know how to do it, right?
Yeah.
I mean, it's crazy how that works. So.
Real estate is definitely very forgiving. That's pretty much how we got it.
Awesome. All right, so how has lifestyle changed your life?
The first line, career I love. I mean, if you would ask me, if I reflect back on what I was doing with my corporate America job, I would never say that, right? So now I'm doing entirely different, and I think I'm never going to go back. Well, people say never, but I'm definitely saying never. I'm never. Flexible time with the family. I think that's really important. We have a small one, that doesn't mean that I'm super attentive on my work that I'm doing, but at the same time I'm flexible, right? Like David said, can you walk out and can your team still work? And that's what I did with this property and other properties that I have in the area. I have the team, and they, we learn how to run your business, and that's the key, right? Anybody can go buy whatever they like to buy, but you got to know how to run it, and you got to know how your team can run it. So these are, Derek said something that he has a clear focus now, what he want to go do it. This is exactly with me as well. I can have, if I'm not doing real estate, I'm with my family, going out on vacations and spending time with my kid. That's pretty much it. The third thing, don't do it anymore.
Very good. Awesome. All right. So what are your goals going forward? I know you've got them spelled out, identical, charted out exactly. So tell us a little bit about them.
Well, in short, so I'm going to go for long term first. So, hopefully I can help more people, and that's what I try to do. If you come across with any members, and they'll hopefully say the same thing. But that's my goal, and build a legacy. Same for the kids, and try to hopefully enjoy with them. But on short term, I mean, keep buying the right deal if it's making sense. Keep buying the right apartment complexes and just doubling or quadrupling our investment. I mean, for me, like David was saying, there are 3 ways of making money, or 3 priorities. Sometimes people look for cash flow, sometimes people look for equity. I was looking for cash flow before, but I don't anymore. I just look for equity, and because I have the.
Yeah, so people invest, again, like he was saying, for different reasons. So if you get into the multifamily, the mentors will sit down with you, we'll chart out a path. And as you're Are you looking for cash flow? Are you looking for equity? Are you looking to grow your wealth? What are your goals? How long is it going to take you to get to your goals? And we'll help you along that way. The biggest issue that we have with new people coming in is they either overanalyze something or they're scared to death to do it, right? We help get you to that point where you pull the trigger, okay? One of the things I tell everybody pretty much every time I get up here is if you haven't done anything, go buy a house. You can go buy a single family house tomorrow. Again, it doesn't matter if you have no money, if you have a little bit of money, if you have a lot, and you're just, I don't know what I want to do. You buy one house, then you're going to have it for, what did it take y'all, a couple months or a couple months, we figured out that, man, this is easy, I can do it again real easy. It does not take long. And then once you buy the second house, you're like, well, this is easy. And then you're like, well, you're just looking for houses. You're just like accumulating like Monopoly. Houses and apartment communities. And then we go, yeah, perfect. All right, so whatever your goal is, we'll help you get there. So.
And there's one last thing I want to bring up with you guys, because remember, there's people watching from all across America, and you're talking about your 28 partners here in Houston. Are all your partners from Houston that invest in this deal, the 28 people?
No, there's some from outside California and Phoenix,
California, Phoenix. So,
and actually Dallas.
and I want people to understand that we have members all across America, invest all across America. You don't have to be in this city. This case study is very Houston-centric because what I teach in San Antonio, I teach in Dallas, we do them all across America. So you can do that. Another thing I want to bring up to you is this. Being a passive investor, one of his investors in these deals, he has 28 members in that deal. 2 of them are him and his wife, right? But there's 26 actual separate investors in this deal. How many of them actually physically went to your property and looked at it, do you think, out of the 28?
It was just one, and that was
So do you see how a passive, you don't have to physically go to the property?
that was an exception because she wanted to do some due diligence and walk the property just for her own fun and learning. So, but I never heard from her again.
But I just want y'all to understand that.
Never heard, but she does send her money. So
Yeah.
she's happy with that.
Yeah,
That's why
I'm not hearing back.
Very good. Awesome. All right, so who's on your team? We talk about a team here at Lifestyles all the time. So who's on your team? Who would you like to thank?
So definitely I keep saying mentors, but a huge thank to Kurt, Scott, Lee. Family had a support. I mean, it's not easy for your wife to say, okay, well, go ahead and leave your job and do God knows what you're doing.
Was she on board with that when you told her?
Well,
Yeah, because, people in oil and gas industry, they make high 6-figure incomes. Yeah. Think about that. Your spouse goes, I don't want to make that, high 6-figure income anymore.
I only asked because I was in that same boat, and my wife's like, what?
yeah, exactly. Yep, that is very true. It was a little bit of a bump, but we were fine. Vendors, lifestyle vendors, lifestyle brokers, they will also help you find the property that they think will work for you, right? Not every deal is a deal. Not every property is going to make you money, and that's where mentorship, brokers come in and guide you. Are you looking at the right deal or not? My
back
team.
off. I'm going to correct one thing. You said every deal is not a good deal. I think every deal is a good deal to the right person that wants to buy it. Because every person buys for a different reason. You may pass on this deal because I think it's a crap deal for me personally because it's not fitting in my goals. David might step in going, man, that is perfect, exactly what I'm looking for. It fits his needs and his goals. So it can be. So
unless it's overpriced, and then we sell it to people from California.
Yeah. And they're there.
And that's exactly what happened to one of our deal that I'm a passive in. We sold it for so much more than we thought, and it was an insurance company who didn't care about cash flow or any of that. Yep. They just wanted to buy.
It would be okay if somebody's willing to pay too much for your properties. It's not a bad problem to have.
Here's the deal, though, David. You have to own the property before you can get that to happen, right? That's the
you got to be not scared to actually buy.
Very good. Very good. Awesome. So we have time for a couple questions?
Absolutely, yeah. All right. Questions? Let me get you a microphone. Oh, wait, Jacob has a microphone. So, guys, if you raise your hand and have questions, wait till Jacob gets there, because remember, there's people online that can't hear you guys. So,
I think we've heard on the news about people who didn't pay rent last year. Did that affect you and your property?
Initially, yes, but overall, we caught up pretty fast. So we had rental assistants, and my team, we had a quick training with them to start applying for the rental assistance. But overall, it worked out. So it's now phasing off. So we're coming out from the rental assistance situation. But overall, I still got my rent.
And here's the thing also, within Lifestyles, we have a group that meets once a month, and we also met via Zoom calls as well during all this stuff. And we had a whole group that we talked about, we're all sucking wind because these people are not paying, or certain individuals are not paying. There was a ton of government assistance that came out. We're like, okay, this is how you use this government assistance, this is how you use this government assistance, or this is how you evict if you can't evict. All that stuff, we have more than one or two apartment owners here. And we all kind of get together and talk about things, and there was some big issues last year.
So just so you guys know that are new here, before case studies, you can't come unless you're one of these lead investors. They have a group of like 40 people that already own apartments, lead investors, that get together and mastermind every single month in each city. Is that powerful? The best in the industry are sitting there teaching each other. It's awesome.
And by the way, just to make a point, so if you're getting impressed with 338% return, I had to be in the line to come here and talk to you like that. There are so many other leads like that. You probably come on every month or something, and you'll probably hear a better story than this one. In all these lead, we talk, I think, monthly or bi-weekly, I can't recall, and we share all that information. So all the owners knows about, especially in Houston, we own so many properties within just lead.
Very good. Another question.
Hi, Sid. So you had, what, 14 million equity right now?
Mm-hmm.
Is there a plan to refinance or sell?
We do. There is some restrictions right now because of the COVID from the lender side, but we definitely have a plan this year. So if we do that, it'll probably be minimum 100% out. So whatever we have invested, we'll take that back.
So what he's saying is he's going to take a loan against it, and if, let's say you put in 100K, he's going to give you back your 100K, and you're going to still have all that equity. How much taxes do you pay on that 100K that he pulls out? Zero, because it's a loan, it's not a sale.
Yeah.
When someone asked online, when is that going to happen? Your refi?
Is that one of your
my
partners?
investor,
One of your investors that you never hear from.
Hopefully this year. Hopefully we're pushing for this year. I wanted to do it early this year, and there some regulation change. So hopefully this year.
And just so you know, you have control of these deals. There's voting, so, you know, do you want to take the refi or not? You know, they'll have voting
We
on
actually
that.
did that. Yeah.
Yes.
When you acquired the property, did you have to pay the previous owner to retain his tenants?
No. The tenant lease stick with the property, not with the landlord.
Yeah, you inherit all those leases, and they sign them over to you, and then you get all the,
Yeah.
Okay.
You even get the security deposit.
yep.
That'd be pretty cool if you could inherit tenants. That'd be
Yeah.
really cool.
Some
For somebody
tenants
that's
you don't wanna inherit.
in multifamily, but not in lifestyles, when you join the program, and I'm already kind of thinking 3 steps down the road, I know that there are tools and things available to help you evaluate properties as you're going into them. Are there tools in that same network, I would imagine, could be retasked to help you evaluate existing properties and show you everything you're doing wrong? Because
Absolutely.
I'm not
So-
getting 10%.
Just so you know, let's say you have an apartment already, non-lifestyles, you bought one on your own. If you join our program, we will literally sit down with you, with your mentor, and go through, and then we have an operations consultant, she's not here tonight, Randa, she'd sit there and say how to operate, what software you're using, and we can work that all out with you, absolutely.
Very good. Yes.
This seems like a pretty challenging. Was it challenging for it being your first multifamily? It seems like a big deal, or is this the average? Was it an average acquisition for a first multifamily?
You know, I remember as a kid, I was going to the bathroom the first time. It was hard. So multifamily, first time deal is hard. First time,
it doesn't-
but after that,
Yeah, it doesn't really matter the size or the number of units. It's really what you can afford and where you're at. But the first time is scary, and yes, it's just difficult doing it. But once you do it, just like the single family home, once you do it the first time, you're like, okay, I've learned this. It's not so bad. Let's go do this one. Okay, well, this wasn't as bad. I learned some other stuff here. You just keep going on from there. So it gets easier and easier every time.
so I guess
You learn something every time. I'm not going to judge that. You learn something new every single time. So
But imagine you trying doing it with no support. Nobody will tell you what's right or wrong. I
Yeah,
wouldn't
think
do
if
it.
you're on your own,
Yeah.
with no mentors, what's your level of risk?
Yeah.
Right? I mean, think about it. People think education's expensive, try ignorance. You understand what I'm saying?
yeah, I will tell you
that.
that every mentor, at least in the Houston office and probably across the board, would not be where they're at if it hadn't been for someone prior to this saying, this is how you do it. let me talk, yeah, I'll talk you through everything. You can call me if you have anything, and that's kind of where we all kind of got to. We're helping each other.
You'll hear every single one of us has a mentor, our first mentor to walk us through our first deal. We all went through the same thing.
Any other questions? We good? All right, Sid, thank you very much. Appreciate it, man.
Thanks so much, Sid. Awesome.